Hey everyone, welcome back to Corporate Decoder, the place where we try to peek behind the curtain and see if these big companies are actually doing as well as they say they are. Today we're diving into Wells Fargo's latest update. Get ready because it looks like they're keeping us on our toes with their preferred stock and debt arrangements. Before we dive in though, if you like getting straightforward insights from financial documents, then make sure you subscribe. And if you want to connect with other folks who love digging into these reports, join our Discord community. It's linked down in the description below. Alright, let's get right into it. We're looking at a filing from Wells Fargo and Company. They're reporting on July 15, 2025. What we have here is a standard filing, but it's detailing a lot of different kinds of stock and debt they have out there, almost like a menu of different financial products they've offered over time. The company itself is Wells Fargo, a name you've probably heard a lot. They're incorporated in Delaware and have a commission file number of 001-02979. Their principal executive offices are located in San Francisco, California. Now, this filing is a bit like a catalog of all the ways Wells Fargo has raised money through different types of securities. This first one is for their common stock, which is what most people think of as owning a piece of a company, and it's traded on the New York Stock Exchange or NYSE under the ticker symbol WFC. Then we get into the more complex stuff, like their preferred stocks. This one here is for their 7.5% non-cumulative perpetual convertible Class A preferred stock Series L. This means it pays a fixed rate of 7.5% and can be converted into common stock. It's also listed on the 5% and can be converted into common stock. It's also listed on the NYSE under the ticker WFCPRL. They also have these things called depository shares. Think of these like small pieces of a bigger preferred stock. And it represents a tiny fraction, a thousandth of a share. These are pretty common with preferred stocks as they make them more accessible to a wider range of investors. These trade on the NYSE too under WFC Pri. Just like Series Y, they also have Series Z depository shares, also for their non-cumulative perpetual Class A preferred stock. These are also traded on the NYSE under the ticker WFC Pro Z. Continuing down this seemingly endless list of preferred stock series, we see Series AA. Again, these are depository shares, each representing a thousandth of a share of their non-cumulative perpetual Class A preferred stock. It trades on the NYSE as WFCPRA. Then comes Series CC, another set of depository shares for their preferred stock, traded on the NYSE under WFC. PRC, it's clear Wells Fargo has a diverse range of these preferred securities outstanding. And we have Series DD again as depository shares for their non-cumulative perpetual Class A preferred stock, listed on the NYSE as WFC PRD. It's like they're offering different flavors of preferred stock to suit various investor preferences. Finally, we have an entry for a guarantee of medium-term notes. This means Wells Fargo is guaranteeing debt issued by one of its subsidiaries, Wells Fargo Finance LLC. These particular notes are due in October 2028, and the guarantee sits on the NYSE with the ticker WFC28A. This shows how they manage their debt obligations across different entities. The filing also asks if Wells Fargo is an emerging growth company. They've checked no here, which means they aren't a smaller, newer company that gets certain regulatory breaks. They're a well-established giant. Now let's get to what most people are really interested in, the actual financial results. On July 15, 2025, Wells Fargo put out a news release about their performance for the quarter that ended on June 30, 2025. They also posted what's called a 2Q25 quarterly supplement on their website, which gives even more details. These documents are important because they're considered officially filed with the SEC, meaning they have to be accurate. Moving on to item 7701. This is about Regulation FD, which is a rule designed to prevent companies from selectively disclosing important information. Wells Fargo is holding a conference call on the same day, July 15, 2025, and they've posted presentation materials are considered acing of the Securities Exchange Act of 1934. These presentation materials are considered furnished, not filed. This is a subtle but important distinction. Filed materials are subject to stricter legal accountability than furnished materials are considered furnished materials for this call. These materials contain historical and forward-looking information. Importantly, while the news release and quarterly supplement are treated as official filings that affect how people see their financials for purposes of something called Section 18 of the Securities Exchange Act of 1934, these presentation materials are considered furnished, not filed. This is a subtle but important distinction. Filed materials are subject to stricter legal accountability than furnished materials. And finally, item 9.01. This section just lists the exhibits that are part of this report. We have the news release dated July 15, 2025 as Exhibit 99.1, the 2Q25 quarterly supplement as Exhibit 99.3. These are crucial if you want to get the full unvarnished picture of their performance. There's also Exhibit 99.3. These are crucial if you want to get the full unvarnished picture of their performance. There's also Exhibit I99.3. These are crucial if you want to get the full unvarnished picture of their performance. There's also Exhibit 109.2 and the presentation materials for the financial results as Exhibit 99.3. These are crucial if you want to get the full unvarnished picture of their performance. There's also Exhibit 10-4-page interactive data file, which is essential for digital searches and analysis. And here we have the required signature section. It's signed by Munira S. Carr, who holds the title of Executive Vice President, Chief Accounting Officer and Controller for Wells Fargo and Company. This confirms the report has been officially submitted and authorized. Now, looking at this finding from Wells Fargo, what's the real story? It's a snapshot, and a rather complex one at that, showcasing their extensive use of various financial instruments. The fact that they have so many different series of preferred stock, each with its own terms and tickers, highlights a strategy of tapping into diverse funding sources. Preferred stocks are often used by companies to raise capital without diluting existing common shareholders' ownership, and they typically come with fixed dividends. The presence of Series L being convertible means that if Wells Fargo's common stock performs well, these preferred shareholders might choose to convert their shares, impacting the common stock count. What also stands out is the sheer volume of these different securities. While it demonstrates financial sophistication and access to capital markets, it also implies a complex capital structure. Managing all these different classes of stock and debt guarantees requires a robust treasury and accounting operation. The fact that the presentation materials are furnished rather than filed is a common practice for forward-looking statements and management presentations, allowing companies to share optimistic outlooks without the same level of legal liability as formally filed financial data. From a strategic perspective, maintaining a diverse set of financing options, including preferred stock and guaranteed debt, allows Wells Fargo to optimize its cost of capital and manage its financial risk. However, with complexity comes the risk of misinterpretation or oversight. For investors, it's crucial to understand the specific terms of each security, especially the dividend rates, liquidation preferences, and any conversion rights to assess its true value and risk profile. While this filing doesn't give us the dollar figures for their earnings or revenue directly, it paints a picture of a company that actively manages its balance sheet through a variety of financial instruments. It tells us they have a lot of different ways they've structured their business to raise money, which is a sign of both maturity and complexity. My take on this is that Wells Fargo, as a major financial institution, is adept at using the full spectrum of financial tools available to them. The sheer number of preferred stock series indicates a proactive approach to capital management, perhaps trying to attract a wide range of investors with different risk appetites and return expectations. However, this diversification also means that a sharp analyst needs to sift through a lot of detail to understand the true financial health and strategy. The key risk here is that managing such a complex web of securities could itself introduce operational risks. If not handled with extreme care, opportunities might lie in how efficiently they can manage these different capital layers, potentially finding arbitrage or cost savings. Overall, Wells Fargo appears to be a company that is very comfortable operating with a complex capital structure, using various types of securities to fuel its operations and growth. It's a strategic choice, and while it offers flexibility, it also demands meticulous oversight. Alright, that's our breakdown of this Wells Fargo filing. What's your take on these numbers and what they signal for the company's future, especially with so many different stock series? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.